Hello friends, good morning. Let us continue our studies of working capital management. Today I will extend my understandings about factors affecting working capital requirement. As I told you in my previous video that working capital management is one of the very important activity that every finance manager has to do to ensure the successful execution of financial activities in an organization. So let us understand what are the several factors that impacts onto working capital requirement. The several factors are nature of business, production policy, market conditions, seasonal fluctuations, growth and expansion strategies, operating efficiency, credit policy, growth rate and dividend policy. I'll explain them one by one. Number one, nature of business. You know, there are certain businesses which happens on a continuous basis whereby the production policy is making on the difference. So if it is a manufacturing organization, you will be needing the high amount of working capitals because your money would be locked in raw material availability, WIPs, finished goods, trade credits, etc. But at the same time, another way by which business happens is the service organizations. In service organizations, there is no need of any sort of working capital. So there is no investment into raw materials and WIPs and finished goods and also the trade credits. And because of that, your working capital requirement goes down. So the first factor is on the basis of nature of business, your working capital requirement impacts. Point number two, production policy. As you know, in business organization, in manufacturing processes, there are two methods by which production happens. One is a continuous production, another one is a batch-wise production. So on the basis of such production policy also, the working capital requirement impacts. Point number three is the market conditions. As you all know, every market has been defined by the demand and supply scenario, and demand and supply is something that is an outcome of the inflationary rate, the banking rate, the population, the growth, the development, the education level, the societal, psychological and even emotional factors of individuals. All these factors defines the market conditions, and those market conditions defines the demand and supply situations. So friends, this demand and supply situations also impacts onto the working capital requirement of a business enterprise. Factor number four is the seasonal fluctuations. As you all know that in rural India, there is a sugar factory is abundantly available. But sugar cane is not available throughout the year. And hence, sugar industries do not function throughout the year. They function twice a year for certain period of time, for certain number of months, and during other times, the regular maintenance and other kind of things happens. So seasonal fluctuations are also the factors that impacts onto the working capital requirements. Another example is you can say the cotton industry or woolen industry, wherein you know that the particular usage of woolen cloth is only during the time of cold. So if there's a winter happening, there's a high demand for such products, and because of that, you need to have the huge requirements of materials available in those times. Whereby in summers or in monsoon time, you don't have to bother about making the availability of woolen products. So it means to say that seasonal fluctuation is also something that impacts onto the working capital requirement of business organizations. Another factor that impacts on working capital requirement is growth and expansion strategies. There are organizations who are aggressive in their processes and they wanted to grow as like anything. So their growth and expansion horizons are also impacting onto the working capital requirements. Similarly, there are certain industries which are already in boom. Say for example, in today's time, the industries of AI, the data sciences, or all the modern day disruptive technologies, they are in high in demand. So everybody wanted to reach out to those things and everybody wanted to purchase the products related to the same. So in such situations, the possibility of sales for those products is always high, and that's why you could see the added requirements of working capital into industries of those type, whereby there may be certain industries which are on declining side, wherein the product is not in demand. People are shifting their patterns of using those kind of products and services, or because of the technological shifts, the product sales is impacting. So such kind of scenario is also impacting onto the working capital requirement. Another factor that impacts is the operating efficiency. As you all know, in modern day there is a use of technology, the use of automation, which is impacting the quality output, and that too on a continuous basis, and that too with highest possible rates. Such kind of situation is minimizing your investments into working capital. But at the same time, there are industries who are functioning on semi-automations, or there are industries which are still operating on a traditional human interruptive methodologies. Such kind of organizations are always exposed to the breakages, the stop downs, the failures, the rejections, the poor quality production, and that in turn can increase the requirement of your working capital. So the operating efficiency is also something which impacts on working capital requirement. Another factor that impacts on working capital requirement is the credit policy. There are certain companies wherein the entire sale that happens is on cash basis, and there are certain industries wherein credit is must. So on the basis of such kind of extension of credit policy to the customers of your company or the type of industry that you are into, is also impacting the working capital requirement of the business enterprises. Another factor that impacts is the growth rate. Apart from other such factors, in certain economies, certain industries are in boom, or maybe depending on to the kind of economical growth that is happening to that particular economy, you could see the growth rate of an economy is growing. So if it is growing, there's a high purchasing power available, there is a banking support system is available, the rate of interest are low, and all these factors are creating the impetus for a increased demand for several products and services across the economy for all sort of products. In such kind of growth rate kind of scenario, you could see the added requirements for the products. In turn, it adds the added numbers in terms of working capital requirements. And the last factor is the dividend policy. As you all know, when business happens, business is taking the capital available through the equity shareholders. And equity shareholders are the one who are always in demand and keep asking for the dividends. So some companies provide the aggressive dividend on a regular basis, paying huge amount of dividends to their customers, their shareholders, and there are companies who are very conservative or very poorly they used to extend the dividends to their shareholders. So depending on to the kind of dividend policy that an organization is opting, it also impacts on the working capital requirement, because dividend distribution is on cash basis, so you need working capital to repay the same. So friends, these are the factors that keeps impacting onto the working capital requirement. I hope you have understood several factors and examples that have been quoted. Keep studying, keep growing, and keep watching the videos that I'm sharing on financial management. Thank you.